Hi guys, it's Alan here with the Trade and Grow group. So we are a group with a community that try to answer people's questions about stock market, especially for beginners. So if you have any questions about the stock market, about analysis of some stocks as well, feel free to join our group and ask us the questions. Later on, we'll also try to make a Facebook group for this as well. Alright, so coming back to business, so today we are going to talk a little bit about whether trading more equals better. Obviously it's a no, I would say. Well, I would say the simplest explanation for this is that the more you trade, the easier you make mistakes. So over trading is a very big problem, especially when you're a beginner, because like you're not that profitable, and as you trade more, you make more mistakes, and you tend to go in without seeing all the indications that actually fits you best, and so you make the mistakes because of the differences between the patterns, and so you make a loss instead of making a profit. And that's the most common mistake that people one of the most common mistake that people make, and so I would definitely hope that you guys can avoid that. And at the same time, trading is all about being profitable in long term. um, Obviously it's happy to see short-term profits with great percentages, but I've definitely seen like so many people who only trades, let's say, 11 times or 12 times a year, so it's around approximately one trade per month, and are still very successful in trading, because they try to find patterns that are not necessarily appearing that much every month or that often, but then when they come up, it's gonna be having a very high probability, let's say like 80%, 85% of having the result they want it to have, let's say like growing up for 30%, and so they get a really good profit from it. Let's say if you can consistently find these patterns in a regular basis, let's say like those people I know who trade like 12 times a year, and every time you can make, let's say, 20%, right? Then at the end of the year, without counting compound interest, you have already made like 240%, which is basically making your account doubling all the time. So think about it in long term, not like 1 year, but like 5 years and 10 years, your account will be growing like crazy. So this is why quality is always about quality. Trading is always about quality trades, but not quantity trades. And I really hope you guys can know more about this, and don't just force the trades. Many people try to force the trade. Let's say is T plus 2, and people try to trade every other day, if they can, or if they can divide the account into two parts, then they trade like every day, hoping to practice more, and at the same time make more trades so that they can have more potential profits. It doesn't actually work that way, I would say. So if you want more practices, you want to be more profitable, you can definitely try to do more paper trades, and maybe analyze more on the stock market. Just try to find more patterns that fits you, that that it's confident that it will come up to be a positive result, that will give you a green day. And so constantly learn more and gradually build the consistency of being profitable. That would be the best for you. And so gradually trying to find the patterns that has the highest probability of ending the day in green, and so stick to it, so that eventually you earn more. That would be the best, instead of just blindly going in and trading more to try to increase your profitability. Okay, so yeah, hopefully you guys can be benefited from this video. If you like the video, remember to like and comment and subscribe to our channel as well. I'll see you guys next time.